So my personal view is that we do the continuing resolution. Gold bounces, silver bounces, crypto bounces, the market bounces. And then we get into next year when everybody is realizing that we have a synchronized slowdown around the world. And all of those are going to take a hit along with the tech sector, which is starting to see some crumbles today, actually.
Good afternoon, everyone. Bob Kudla with me, tradelikeagenius.com. We are going to talk about gold, crypto, the shutdown, what you can expect to year end, and then more importantly, what 2026 might bring us. So what's next, Bob? Thanks. Halloween's coming in. Can we expect some bats to fly by and drop kilogram gold bars into our laps here? I don't know.
Yeah.
Yeah. Okay.
Well, let's
welcome
talk
everybody.
Gold. Let's talk gold first. So we're in an environment right now where the dollar is strengthening. Okay, we have a shutdown going right now. There's no liquidity, no new money supply coming into the treasury market. So because the government can't borrow in this environment until they get a continuing resolution to increase the debt ceiling. So what people don't realize when you look at the dollar is that there's paper currency that everybody knows about. There's electronic currency that is when your money's sitting in a bank account. And then there's fractional reserve currency that gets created out of thin air to generate loans. Okay. But if the loan books are flat, in terms of new issuances, public or private, there's a natural destruction of those electronic dollars because every time you make a car payment, you make a home payment, you make a credit card payment, you're reducing the nation's money supply, and so you have a natural drift up in the dollar in these environments. And the other thing that's happening now, too, is that you have fiat currencies around the world are starting to collapse against the dollar. Now, normally what happens in that environment is gold and silver are priced, and crypto and oil are all priced in dollars, right? So if the dollar gets stronger, ergo, the dollar can buy more of those, and you see that reflected in lower prices. But 25% of the time, gold and the dollar move together. And that's what we just went through, that period of stress. And, just like anything else lately, is so much derivative trading, which is option trading, behind the scenes trading, that create these environments where you get these basically vacuum, dumps in the market, because there was really no volume to support the moves. And so in a sense, this is good news for gold and silver. Usually when you get a move that blows off like this, is it usually comes back and it tests a major resistance area, which then becomes support. And then we could probably see that moving higher from there. But the only caution I have with gold and silver and crypto is that we're going to have a synchronized, I think, global recession coming up. And so we just have to kind of be on our toes here, because that usually wipes out a lot of what's called the fractional money and tightens supply around the world. So my personal view is that we do the continuing resolution. Gold bounces, silver bounces, crypto bounces, the market bounces. And then we get into next year when everybody is realizing that we have a synchronized slowdown around the world, and all of those are going to take a hit along with the tech sector, which is starting to see some crumbles today, actually. Crypto's held hostage to liquidity too, Dave. Phil, my partner, thinks that there's probably a move to 98,000 in there. And from there, then he thinks that's a strong hands environment to absorb the new liquidity that's going to pour in once these central bankers realize that they got a recession on their hands. So it's kind of my opening thoughts on gold and silver. Oil is really interesting. Record U.S. production in oil. India decided to not buy oil from Russia. So I guess whatever pressure the United States put on India, they fold it. And so that gave a strength to the oil markets. Usually the oil markets are kind of weakish here until you get to the end of December into January. But anything below $55, production comes offline. And so you have I think that's going to hold, and then I think we're going to get a nice pop going into 2026 before the recession hits, and then we roll over again. So that's kind of where we are, and that's kind of how we're playing it. You know, we're very short term at this point. I think the easy money, that April to September, move in the markets, that's over. You just have to look no further than Oklo, which went from like $10 to $200, and I think right now it's back to 118 and falling. A company has no revenue, so that kind of insanity is starting to get washed out of the markets.
Hopefully, yeah. And how are you playing that over at Trade Genius then?
Oh, well, you stay away from Oklo because you don't know. You don't know when it was a play toy. Somebody with a bigger stash than me could just take me right out of the game. So you just kind of have to stay away from me. You could try some puts here and there, but they're too expensive. And then also, we're fully positioned now in TLT and TLTW, and we think bonds 2026 is going to be the year of the bond market. No matter what they tell you, the bond market's going to crash. You can already see it. Any stress in the stock market, money immediately moved into the bond market, and I think you're going to see more of that as the Fed cuts. And I think the Fed's going to cut all the way through 2026.
You think 2 more times this year, and then they're going to continue? And
yeah, for sure. TLTW, it has an annualized return right now this year of 29%. So TLTW is a derivative that owns TLT and then sell calls against the position. And so you get a monthly dividend, and then you get the carry from TLT rising. And it's working out right now for me. I checked it last week. I was at 29% year-to-date gain on it. Not bad for a bond fund that everybody has written off. And we think TLT can climb into anywhere between 130 and 160 next year. I'm on the 130 side. Phil, my partner's on the 160 side. As we roll into recession, we think a lot of money is going to move into TLT. And then TLTW will just go along for the ride. It won't move up as much as that, but there's less volatility in it. So at some point, I'll roll out of TLTW and roll right into just a TLT, take advantage of the price gains, and then hop back out.
So the entire crypto market's going to draw down then, in your opinion, because of the liquidity issues coming in 2026. But again, on the 4-year cycle, that seems like it.
I'm sorry, I cut you off. Yeah, I think we should get I won't call it a dump here, but there's more pressure, and then I think we get a pretty good bounce. I know the bulls are saying, hey, we're going to hit 180 to 200,000. It all depends on how much global liquidity comes in, Dave. Okay, it's all Bitcoin. You could put everything else away. Just look at the amount of global liquidity out there. You can find it every day out in the internet. And if that's rising, Bitcoin's rising. That's falling, Bitcoin's falling. It's simple as that. You don't have to overthink this. You don't need some magic Ouija board. That's just the way it works. And
global M2's money supply.
Yeah, and then in the United States, if you want to have a secondary confirmation, if TLT is falling, okay, which means that the bond yields are rising and price is falling, that's usually Bitcoin likes that too. And so right now you got TLT rising, global liquidity is slowing down, so ergo TLT's up, Bitcoin's down. So that's kind of where we are. And there's a great play out there. There's a high yield product out there called BITK. It's tied to IBIT, which is a derivative of Bitcoin. So it pays a really nice dividend. So if you believe the story, what they do a daily 0 days to expire call program against IBIT. So in a flat to generally rising Bitcoin market, that's pretty much free money, but it certainly does not like when Bitcoin falls. So you have to kind of gauge when you want to enter that, and it's a weekly payout. So you don't have to stay in it forever. If you don't like the price action, you can hop off for a couple weeks, hop back in. So I'm in and out of that, and I think that's a great way for people to pick up some nice income.
Yeah. So this recession that you're talking about, like, how deep is it going to be, do you think, compared to previous recessions going back, I don't know, 100 years, for just an even round number? Just to get a gauge of it, is it going to be near depressionary type levels, or is it just going to be a small brush off and, 6 months after, a year later, everything's happy and rosy again?
Yeah, I think it's going to be a mild recession, but it's not going to be a short recession.
Okay.
So we have two factors that are coming into play that are really outside of anybody's control. You have the demographic wave, right? So, when I retire, right, and I'm not earning the income I did in the past, but also I'm not spending like I did before. So we have more and more people that in that environment, Dave. And so you don't spend as much money. And where you do spend your money on is more experiences and healthcare related versus house formation and family type of expenditure. So there's going to be a shift there. And we're in the meat of it right now. So the last of the baby boomers are, over the next 4 years, are going to be rolling into retirement. Okay. So that's going to take a lot of spending power away. And number two, this AI, whatever you want to call it, the revolution, the automation, is that it's going to, companies just aren't going to hire back. Okay. They're going to just, they're going to see how they can automate out, their expenses. And usually when they mean by automating out their expenses, that means they're automating out people. Okay. So you have that environment you have to deal with too. And I think that's going to be more secular. If you think about, you running your business, I'm running my business, for the same amount of revenue, if I doubled my revenue, I wouldn't have to really add anybody else to my company. Okay. And you do some farming stuff. I've been watching, because I've been in Japan. I'm getting, my computer still thinks I'm in Japan. So I'm getting all these Japanese feeds. And I just watched a series of videos on the Japanese have been down this road now for 20 years longer than we have. And the level of automation that they put into their systems is amazing. And especially in agriculture, Japan is different than the United States in the sense that most farms are small. And now they can run these farms. It used to be 3-4 people, to do this. They're doing it with one person. And the drone technology is amazing. So when you'd have to call a contractor in to help you do some of this work around fertilizing or pest control, or even sowing seeds, they got these massive drones now that a user can simply just define the field edges by just putting reflectors down on the corners of the field, and those record against the GPS, and then they just get this drone, and which they can lease, and they fill it with seed or fluids for pest control or fertilizer. And the lady said, look, this one Japanese farmer, she's just one woman running a farm, 60 acres in Japan. And she said, I don't even have to pull my tractor out. The drone does it all for me. And she goes, this would take me a day and a half if I was doing this via tractor. She goes, this took the drone 3.5 hours to fertilize my field. And she said, we're constantly investing in, she goes, I lease my drones, and I'm buying the drone. She said, that's what kind of ROI there is. And And so I think you're going to see a wave of that come into the United States. It's not all bad. You know, you have right now, I call mass customization is coming into fruition. The other thing that I saw from Japan that's coming our way, there's one guy that could produce 400,000 screws running 10 machines. Okay. All he has to do is make sure the machines don't break. And that stuff's coming to the United States. There's a company out there called Send Cut Send. I don't know if you ever heard of it, but you can just go ahead and send your coordinates in for your product, and they'll fabricate it for you and then send it back to you as fast. They usually within a day or two they're fabricating for you. That's going to multiply that across every sector, and I think what you're going to have is you're going to have a layoffs, and then you're going to have, I think, a slow diffusion back into the rest of the country, where the work's going to get closer to the end manufacturer. So it's really fascinating times, and I think, you know, I think people are going to have to be willing to move, Dave, you know, out of the urban areas and out of the coasts, unfortunately for people, and people are going to have to learn how to get their hands dirty again. We don't need any more baristas, right? And restaurants are going to fall on very hard times because their prices are out of control. And I'll say one more thing before I take a breath. So I'm going to
breathe, Bob. Breathe.
When we were in Japan, we ate, our lunches were $7.50 each. Okay, for the same food at a restaurant down the street from me, it's $29 for the same food. Plus, I got to pay a tip on top of that. And so you're starting to see restaurant sales. It's starting to roll off the sectors like the lower middle class to middle class now. Restaurant visits are collapsing. And I think, you know, and we're the same way. We're like, it's ridiculous that I got to pay $100 to go, you know, eat 2 chicken cutlets, right? And a glass of wine. You know, in Japan, 2 chicken cutlets, you know, chicken tempura or chicken katsu, and 2 beers, you know, it cost us like $20, you know, which is just ridiculous. And they have higher cost of everything than we do. You know, we have a little bit of a benefit with the dollar strength, but still, I think what you're going to see is you're going to see a collapse in what I call the non-required spending. I think, you know, if you're in an industry that people can live without, you're going to be one of those people you're going to have to live without it.
Yeah, and I could attest to you. I've traveled to Japan too, and before known as one of the most expensive destinations on the planet, has now become more affordable than living in the United States. And Italy is the same. You know, going to Italy as well. Last year, it was cheaper in Italy to go out to restaurants and do, you know, nice Italian restaurant, big crafts of wine, and it was really 30 to 40% cheaper here than America. And I was shocked. And especially, you know, the Japanese rate is, I think, is around, would you get 160 or 150 there right now? You know, it's a nice rate. But you see, it's almost like a sine wave of economic activity where, you know, you were talking about layoffs and things that are never coming back. Okay, well, commercial real estate is one of those. That's never coming back. They're going to have to repurpose all those buildings. But again, it's up. It rolled up. Everybody came out of the farmlands back in the 1940s after World War II. They all come back, and now you're talking about they all need to return, and that's nothing but a cosine wave that's coming up, an apex. So it's almost as if everything has reached the trajectory at the high points and it's reversing itself back down to base medium again in almost every industry. And do you think Americans will really be able to get their hands dirty again? Like, they just haven't been brought up like that. I guess necessity spurs that sort of, I guess, movement, but people aren't going to want to move to, like you say, the flyover belts, or live in a farming community. There was only 5,000 people in your town or something like this. I
think what happens is, you know, I was watching, you know, a show where people left the city, and the first 3 or 4 months they hated it, and then now that they're like a year and a half, they're saying, "I can't believe we ever lived in the city."
Yeah, that happens a lot.
Yeah, people don't know what they don't know, and I think when you realize that your life stress virtually collapses when you're living in a less expensive area where, you know, you have really good neighbors. You don't have to worry about stuff. And I think we'll see that again. World War II was an interesting phenomenon for the United States because that's what brought us where we are today. And I think, we're going to probably see that rotation out. I mean, my wife constantly talks to me about where can we move, the problem for like somebody like myself, at my age, you're ripping out your friends network is too established, just to pick up and go. But if I was 30 years old, right now, I would, because what I do, I can live anywhere. I would look for an area where I joke with my wife, Southeast Kansas, and I want to get a farm that has natural gas extraction already, and then you're probably the best possible place you could be in the country, in terms of cost of living and food production and energy extraction. So I think you're going to see people make those decisions again, and it may not be like it was when they were just getting people to get free land to live anywhere in the country, but I think you'll see people migrating back to places like Des Moines, Iowa, and stuff like that.
I can't see you. I'm sorry to interrupt, but I can't see you going from Southern California into that bone-chilling winter in Kansas where it gets like 20 Fahrenheit below zero with 50-mile-an-hour winds. I just can't see Bob trudging out. Let's go get the chickens.
Yeah, well, I grew up in Pennsylvania, so I'm comfortable. My wife grew up in Ohio. You got to remember too, when it's bone chilling cold out there, that farm shut down and I'll be in Hawaii.
Yeah. Hey, take me back to the 1950s. After World War II, we got into some serious inflation here in America too. That was like a very hyperinflated, I wouldn't say hyperinflated, but incredibly inflated prices after World War II. I mean, walk me through that chapter of history and how might that reflect here coming up in 2026? Like similarities
there's
across the time.
There's a cycle out there. I'll send it to you. It's pretty cool. It's been pretty accurate since the 1880s, and so it shows what they call major cycle tops and lows and minor cycle tops and lows, and right now we're having a confluence of cycle tops going into 2026 that don't bottom till 2033, and that probably ties into some of your climate stuff. Obviously adapt 2030, right? So I think what we're going to see is we're going to be seeing a series of lower highs and lower lows in the stock market over the next 7 years. And this thing's pretty good. I say it has about an 85% accuracy rate over time, for predicting the cycles. And I even showed this to people, and people were telling me that they have other cycle work that says 2026 tops it. And after a year of 2025 with the pumping in the markets, they make sense that 2026 would probably top out. So I think that's what's happening. And here the other thing too, Dave, is that China's in a world of hurt right now, and they're desperate to get all that production that they have out into the world, and they're just going to dump it, and so that's going to drive a deflation in, and I would see going into 2026, we're going to have some negative prints. Okay.
Ooh, okay.
In terms of CPI, and that's going to accelerate the down movement in the interest rates,
and hence the reverse on the bonds increasing. Yeah.
Okay. Bonds will be. That's what I'm saying. Next year, you're going to make your money being in the bond market, and and let's say I'm wrong, then you're going to make your money in Bitcoin and gold. So so that's kind of that's the seesaw, but tech is pretty much topping out. This AI boom is probably at its end here. You can only build so many data centers. We can't even electrify the data centers,
without taking us into hyperinflation on electricity. You see those start points of when ChatGPT started with the data centers, and electricity just goes vertical for everybody across the country.
Yeah, and that's just not going to happen. I mean, the people be screaming, right? Some rich guy, that owns these data centers is causing me to not be able to heat my house, because they took everybody away from natural gas and they make everybody have all electric homes. And so I just think the political environment is going to be pretty, I think, intense and insane for these data centers. So I think we're going to see a crack in there. I've been slowly building up a position in DIPS, DIPS, which is a short of NVIDIA, but it pays a yield. And I think that's going to be, I think, a secular play going into 2026.
Well, where's the electrification coming? All right, so they obviously, these people are smart. If they've got billions of dollars, which is far more money than I have, they have networks of trillionaires and billionaires and trillion-dollar conglomerates that they own and control, which I don't, and they're up at the top levels of manifestation on the planet in terms of control of monies and resources. Why would they build all that out if there was no electrification possibility? Now, there has to be another possibility of electrification in some companies that have patents or emerging technologies that can electrify this outside the existing grid, or else, like you just said, it's going to be like two rhinos running into each other, an elephant and a rhinoceros colliding with a hippo jumping on top, if we don't stop this, because people are going to get angry. They're already angry about electric prices. I just can't see why they built so much if there's no way to electrify it.
Well, part of it, if we build it, it will come mentality. It's just like the way they do with retail. Starbucks and Home Depot grabbed every corner they could, and then they threw away the stores that weren't profitable. That's the same with these data centers. They're just going to build them out wherever they can get them built out, and they're just going to not turn on the data centers that can't give them the electricity. The other big hope is everybody's looking at nuclear. But the problem with nuclear is it's not like building a power plant. These are 5 years. Even with the small nukes, it's still 5 years from start to finish. Even if they'll build a nuke plant off site and then bring it in, but you still got to wrap all that infrastructure around it, and you got to get all the approvals done. The United States government, Department of Defense, is going to put in a small nuke plant in every base in the country. But they're not starting that till 2027, and it's going to probably take 5 years for them to roll that out. So I think all that stuff is ahead of itself, and then I think that'll be the next wave, is these small nukes. But right now it's more pipe dream than pipe, but it'll come. It's just that people are already owning it like it's already here, which is usually what happens in these situations. So we'll get a pretty good sell-off in that area. And that's what's been holding the market up. Anything AI related, uranium nuke plants are all associated with the AI movement. Palantir is part of that. You have NVIDIA part of that. You have AMD part of that. And Intel, and all those are way overvalued right now, and it'll drive the index down. So that's the other reason why we think 2026 is going to be a tough year. Just because you just can't get the growth that you need to support the prices.
Yeah, but the growth that's being supported is, but there are lines around the block to buy gold and silver in China. There's lines around the block to buy gold and silver in India. South African rand mints out. Korean just suspended sales. You're starting to see it across. At least the Asian market seems to be a little more in tune with this precious metals thing moving forward. Then we're seeing here in the West, London's out of silver for the moment. I know they get replenishments coming in, but it's on a demand basis where they're, as soon as it gets there, whoosh, back to zero again. So swing this over. Obviously, they're seeing something of the value of their fiat currencies also eroding. And then the central banks of all these countries like India, China, Korea, Japan are stopping citizens, the plebes, from purchasing any of these metals. So, this is its own construct of, people see, I got to get the value and hold metals. Everything's devaluing. But the government's like, we need it more than you do. You're our serfs because you're our citizens and you're the slaves here to hold up the machine. So where does that take us out? Because gold and silver definitely look like, because the data centers, and then I'm looking at all these robots and automations. You mentioned leasing the drones. Well, most of these robots, you got a lot of people envision, we're going to buy a robot and it'll sit in the corner. Most of it's all going to be leased. That's how they're going to make their money. So it's going to be a continuous demand of at least silver for a lot of this. New car batteries. I just can't see a lot of these shortages alleviating when we're moving into this incredible new technologies that all require gold and silver to run as the actual manufacturing process. So, you mentioned gold and silver, like you really, JP Morgan came out, and it was at Jamie Dimon yesterday, said assured 5,000, possibly 10,000 gold. So, people looking at that like, wait a minute, we haven't seen the end of this, I don't think. I mean,
And Jamie Dimon, whatever he says, you do the opposite of. All right, he's talking his book. Every time you wanted to buy Bitcoin, you just wait for Jamie Dimon to tell you that Bitcoin's
yeah,
going down.
I will fire anybody on the spot that does anything with Bitcoin. I remember that when he was over in Europe.
So he does that a lot. So look, I mean, I don't think anybody's saying nothing's going to happen to gold and silver. I think it definitely will rise. It's just that you got to understand in the United States market, where we're talking, is that it's competing against a stronger dollar.
Yeah.
The Indian rupee and the Korean won and the Japanese yen and the Chinese yuan, they're all collapsing currencies. People are desperate to get hard currency. Their only options is, their stock markets are limited. Real estate is collapsing in some of those countries, and gold is really, and you can hide gold, right? So, they hide it in jewelry, they hide it under their bed, whatever. Where real estate, the government can come in and just take your land, right? So those people are going to buy gold all the time. But United States, we have other ways to generate yield. Remember, the purpose of holding any asset is to generate yield, right? Unless you're independently wealthy from another source, just owning gold is not good enough. Okay, great, you own gold. But if you don't have a job, you have to sell your gold. So you want to buy assets that could generate a yield for you to replace you having to work. And that's what I do. That's my thought on that. I own very little physical anything. I don't own any Bitcoin. I don't own any gold. I own very little silver. But I generate yield from all three of those things through the stock market. And that's just my way of doing it. We joke in the room because, obviously there's crypto bugs and gold bugs and silver bugs, but, go down the street and buy a cup of coffee with your gold that you have and you're safe. Let me know how it turns out for you.
You do have assets you can take loans out against that, right? And then it was Warren Buffett said, if you really want to become rich, you have to have assets that produce income for you while you sleep.
Yeah, that's right. I totally adhere to that point of view. But come trade with us. I mean, it's really good time. We'll definitely help you trade better, and you're going to need some sort of guidance here as this world gets pretty wonky. We're pretty math focused here, so and it's all reflected in the charts, and we give you access to the charts. This is not voodoo. So we give you access to these algorithms, and you can trade whatever you want to trade. I try to put a trade out every day, at least, in the room, and I'm in the room all day. So there's 2 rooms you could be in. One, like I'm talking to Dave, not on camera, but verbally. And there's another room where it's just a chat room. But we have people in there that's been trading with me since the beginning. I think I'm on my 2015. I guess this is coming up on our 10th year here. So pretty wild. And a lot of fun. And we don't overhype anything. We're just going to try to help you, grind your way to profitability and wealth building.
TradeWith2030.com. That's where you want to go.
Guys.
Best of luck as the world changes minute by minute and the changes become much more wide than they were tight before. So we'll see you next month. Bye for now.